know you could be writing off 20% of your taxable income? Let me give you the tea. What's up everybody, and welcome back to the Keeper YouTube channel. My name is Tyra and I am here to teach you everything you need to know about 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. So the IRS makes the QBI deduction very hard to understand. Good thing I got your back. I'm about to break it down for you in such a simple way you'll be an expert by the time you finish this video. So let's get into it. To kick things off, let's talk about exactly what a QBI deduction even is. QBI stands for Qualified Business Income, and it's a tax break that lets self-employed people, like ourselves, write off 20% of our taxable income. Sounds pretty great, right? Whether you're an itemizer or go the standard deduction route, you can take advantage of this tax break. And just so you guys know, you can take the standard deduction and write off all of your business expenses too. I've got a whole video on this and it's going to blow your mind if you didn't already know. I've linked it down below. Now, before you get too excited about QBI, I have to warn you, this only applies to income tax, so it won't do anything to lower your self-employment tax. If you're looking to lower that tax, make sure you're keeping track of all of your business expenses. And what a better way to keep track of all of those write-offs than with the Keeper app. If you did not know, we have an app and it helps you keep track of all of your business expenses. The Keeper app will automatically categorize your expenses for you. It's quick and easy to sign up. Just click the link below in the description box to get started. Who can take the QBI deduction? So can anyone take the QBI deduction? Not exactly. You need to have pass-through income to qualify, which means you are someone who doesn't pay corporate income taxes. Think of it like this. If all of your business income passes through to your personal tax return and you don't have to file a separate corporate tax return, you're good to go. For all of my freelancers, gig workers, and independent contractor friends, y'all are 100% in the free and clear for having pass-through income. Oh, and if we have any people in partnerships, people with S-Corps, or most people with LLCs watching this, y'all count too. An easy way to remember this is the only people who can't take the tax break are people with C corporations or C Corps. So let's break it down even further to make sure you understand exactly what kind of income qualifies. There are three main situations that do not count for your QBI. Number one, a W-2 job. Number two, any business outside of the US. And number three, any of your interest or investment income. So that just leaves one type of income that does count, your self-employment income. How to claim the QBI deduction. Now that we've covered the what, let's keep rolling and talk about the how. How do you claim the QBI deduction? So there are two types of forms to use, and it depends on how much money you make. For most of us, we'll use form 8995. For folks who make more than $170,050 if you're single, or $340,100 if you're married, you'll use form 8995-A. Check out the description box below for the most recent numbers on that, since it can change from year to year. But before you get started filling out your form, you're going to need to know exactly how much your taxable self-employed income is, and this number is calculated after you subtract all of your business write-offs. If this all sounds a bit too good to be true, I can assure you it's not. If you're like most of us freelancers, gig workers, and independent contractors, that's really all you need to know to get your full 20% write-off. But for those of you hustling and bringing home those mega dollars, there are some limits to how much you can claim. For any of you bosses making $170,050 single or $340,100 married, y'all gotta settle for only getting a partial deduction instead of the full 20%. But hey, most of us aren't there yet and can just appreciate our full 20% write-off until we make it big. And just in case we have any superstar business owners in the house, if y'all are making over $220,050 single or $440,100 married, your QBI deduction is going to get capped in one of two ways. Either half of everything you're paying your employees or 25% of what you're paying your employees, plus 2.5% of all of your businesses, buildings, and equipment, whatever is higher. Lastly, there are some special rules for folks who work in what the IRS calls a specified service trade or business, aka SSTB. What kind of work counts as an SSTB? We're looking at you, healthcare, law, accounting, consulting, sports, and performing arts homies. If that's you, your QBI deduction will mostly work the same way. But the difference is, once you hit the IRS's second higher income threshold, you sadly won't get to take any QBI deduction at all. And remember, that threshold is $220,000 for single people and $440,000 for married people. Frustrating, I know, but again, most of us are still striving to make it to that income bracket in the first place. Am I right? Whew. That was a lot of numbers, but hopefully I made the idea of QBI deductions a little easier to digest for you. Our goal for this video was to give you an introduction to what QBI deductions are and how you fit into the mix. Now, take this knowledge and go teach one of your entrepreneur friends and send them this video for further details. And that's all for today, y'all. Comment below and let me know which form you'll be using to get that QBI deduction. And if you would like more easy to digest tax content, make sure you give this video a like. And if you have not already, make sure you hit that big red subscribe button down below. And I will see you guys in the next one.